Hey, welcome back to YT Finance, and in this video, we will be analyzing Palantir Technologies. So we'll be talking about their latest news updates, as well as where the future share price could be for the PLTR stock. In this video, we will be analyzing three main articles, to where the first one is titled Palantir versus DataDog stock, which is the better information technology buy. So clearly, we're going to be comparing two of, in my opinion, some of the best software companies on the market right now. So without further ado, let's just dive right into it. Palantir Technologies, ticker symbol PLTR, and DataDog, ticker symbol DDOG, are two of some of the best software companies to buy right now on the open market. And the thing about both of them is that they both serve commercial as well as governmental organizations. Here's a quick rundown of what Palantir Technologies does from a snippet off their website, and it says, and I quote, "Palantir is rooted in building data-driven intelligence applications for complex, high-value government and commercial use cases." Essentially, Palantir Technologies is a big data and analytics company which serves both commercial clients and government enterprises. It takes large loads of data and it uses artificial intelligence to interpret this data to then give the management of these organizations the best choices for future actions. Next up, we have DataDog, to where DataDog is described as an observability service for cloud-scale applications, providing monitoring of servers, databases, tools, and services through a software-as-a-service-based data analytics platform. So clearly, these companies are not identical to each other. However, they are both considered software companies and very good software companies at that. I personally own both of these companies in my portfolio. Regarding Palantir Technologies, they make up around 4% of my portfolio, while DataDog makes up 3% of my overall portfolio. So clearly, I like both of these companies. But in this video, we're going to talk about which one is the best. And the best here is going to be decided upon which of these companies carries the least amount of risk. Because if you know me, you know my risk management policies are always in place, that I make money during recessions and bull markets. So I'm always trying to identify a company that has great growth prospects as well as the company which is extremely safe. So that's how we're going to be comparing both of these companies to one another. I also want to use some accounting ratios and various accounting metrics to determine which one of these companies are a better buying opportunity. So let's start off with the price to sales ratio, or the PS multiple. So ideally, we would want a lower PS ratio, making it a better buying opportunity. So Palantir right now and their PLTR share price trades at a PS ratio of 8.9 times, which is lower than DataDog's 13.5 times. So just comparing their price to sales ratio, it looks like Palantir does edge out DataDog in this regard. However, I also want to bring to your attention that when we look at PS ratios, we need to offset the PS ratio compared to their overall growth rates. Clearly, a company with a higher growth rate, which is increasing the amount of sales and revenues that they are bringing in, can justify a higher PS ratio than a company that is growing more slowly. But I will talk about their growth and compare their growth to one another later in this video. But as of right now, the PS ratio, in terms of a value standpoint, Palantir takes the cake on that metric. Next, let's move over to how much cash they have on their balance sheet. Both Palantir and DataDog have net cash of over $1 billion. So money is not going to be a problem for either of these companies, and considering that we are in a rather negative macroeconomic environment right now, companies with money on their balance sheet sets these companies up to survive recessions, if a recession even happens. When we look at their forward PE ratio, which is their price to earnings ratio, we also see in this accounting metric that Palantir takes the cake once again, having a lower PE ratio of only 40.7, while DataDog has a 67.9. However, again, when looking at these accounting metrics, we need to offset these statistics according to their growth rates, which we will get into. So as far as the financial metrics and the fundamentals go, it looks like Palantir Palantir barely edges out DataDog in these metrics that were highlighted. However, how does DataDog and Palantir compare to their overall peer group when compared to Zoom Video Communications, HubSpot, Fair Isaac Corporation, which is a company I own, and Cloudflare, again, another company that I own? Well, if we look at their overall metrics and their price performance, we can see that essentially FICO, or Fair Isaac Corporation, was the only one that actually had a substantial gain. Meanwhile, DataDog fell by around 50% in value, while Palantir fell by 30%. Looking at the metric on screen, we can see that Fair Isaac clearly was the winner from this peer group. However, Palantir would be in third place, while DataDog would finish last according to their overall growth rate as of late. But we do need to take into consideration that we're only comparing them to 6 similarly sized software companies. Because trust me, now we're going to start talking about the advantages of DataDog over Palantir Technologies. Let's start off with their customer count. DataDog quadrupled their customer count since 2017. And you can see on screen here that they are rapidly growing their overall customers, and I hope this leads to higher revenues going forward. This is a huge competitive advantage, particularly when compared to Palantir Technologies. Palantir increased their overall customer count by 55%, while DataDog increased their overall customer count by 400%. So in this regard, it seems DataDog clearly is the winner. However, there is a catch, because Palantir's customers on average generate more revenue than the average DataDog customer, considering that Palantir is doing business with very large government agencies such as the CIA, the FBI, the US Army, and the United States Navy. So then that begs the question, is Palantir better because even though they are growing their customers at a slower rate, their customers are giving them more money, or is DataDog better because they are gaining more customers, however the money that they are gaining from customers are lower on average than Palantir Technologies? Well, to be honest with you, I honestly would side with the DataDog on this particular growth metric, considering that they are not only growing faster, but I hope this is going to transfer very positively into their overall future revenues. So this would imply that DataDog's customer base is much larger, however Palantir's customer base brings in more revenue per customer just because there are larger institutions. However, I think this actually works in DataDog's favor, just considering that the more institutions they bring in, the better. But now we're going to get into the difference of revenue growth over the last 3 years. So you remember those financial metrics that Palantir was beating DataDog in earlier. Now we get to see if DataDog actually has a justifiable metric compared to their overall growth rate. And we're going to start off talking about their 3-year growth rate, where DataDog has increased their revenues by 300%. Meanwhile, Palantir has increased their revenues by 135% during that same time period. Again, it's a runaway win for DataDog here, considering that they have more than doubled Palantir's percentage increases. So, DataDog compared to their peers, and particularly Palantir due to its lack of growth, DataDog would take the win in that regard. So now this begs the question, which one of these are fairly valued? And according to professionals, which one of these are a better buying opportunity? Well, if we consult professionals and experts in this field, DataDog, ticker symbol DDOG, has a much higher rating of 35 buys from experts and 0 sell ratings. Meanwhile, Palantir has 16 buy ratings and 6 sell ratings, and 3 of these 6 sell ratings are strong sell ratings. So according to professionals, DataDog again would take the lead. But not all professionals see eye to eye on this. We also have quant ratings, which have a hold rating for DataDog and a buy rating for Palantir Technologies. One disadvantage that Palantir has compared to DataDog is that they have consistent share increases regarding the number of shares due to their stock-based compensation, also known as SBC. So Palantir's share count has gone up more than 100%, while DataDog's share increase has only been around 5%. Again, DataDog would win in this particular metric. But what about the returns that these companies have given to shareholders? Well, since their inception, DataDog has given and returned returned value to their shareholders of around 101%. Meanwhile, Palantir has actually shown a loss of 18%. Again, DataDog would win in that regard. That's why at the end of the day, it seems that DataDog is a better buying opportunity, even though Palantir is a strong holding opportunity, which is completely consistent with my past ratings on Palantir Technologies. However, I do own both of these companies. I actually own more Palantir than DataDog, but given short-term macroeconomic conditions, it seems DataDog takes the cake over the short term, and over the long term, it's truly anyone's game. However, I do want to further focus on Palantir and their future metrics, considering the amazing opportunity for investors to get in on this company while it's still technically cheap, considering that they just won a $100 million deal with the United States Department to modernize data management. Palantir recently bagged a $99.6 million deal that will last 5 years with the Bureau of Medical Services, also known as MED or MED. The State Department has already given Palantir $10 million due to their purchase agreement, and it will book the remaining value of this contract over the next 5 years. So this is going to be a very consistent and stable source of income for Palantir Technologies, which is fantastic news. Other investors also believe that Palantir is a buying opportunity right now, even though I think it's a holding opportunity. I do like Palantir. Again, it makes up 4% of my portfolio, but many people believe that this company is about to surge. Why do they think this? Well, management right now is expecting the company to bring in positive net income for the entire year of 2023 in regards to their earnings. This means as they continuously release quarterly earnings reports, this is going to act as mini catalysts for the overall share price, causing the PLTR stock price to increase, but it keeps getting better. The company is constantly cutting their overall expenses, which is going to lead to better future financial metrics, even though there are a few risk factors that I want you to be aware of, and those would be the company's reliance on stock-based compensation, lumpy government contracts, meaning if they lost any of these government contracts, a large portion of their revenues would be impacted negatively, and the company is not growing as quickly as management originally anticipated. However, I do want to offset this with a quote from their chief financial officer, also known as the CFO, who says this: "This is a statement to our disciplined spending amid the macro uncertainty, as well as the normalization of our stock-based compensation expense overhang since becoming a public company." Stock-based compensation expense was down $38 million in the fourth quarter compared to the year-ago period, and down $213 million compared to the year-ago period. As we look ahead to 2023, we will continue to exercise spend discipline across the company, pace hiring, while continuing to invest in high priority areas, including in our product offerings, building out our go-to-market strategy, and technical roles, end quote. So I thought that was a great thing that the CFO reminded investors about, and it should honestly get investors very excited. Despite Palantir's recent miss on their top-of-the-line 30% CAGR, which is the growth rate in which they should be growing their revenues, Palantir still looks prime for future growth, and overall, it's a long-term buying opportunity, according to many investors. Despite economic slowdowns in the macroeconomic economy and increasing interest rates and inflation, Palantir is doing very well despite a negative macroeconomic environment. The company is still landing contracts, they're growing their existing relationships, and going forward, I'm still bullish on Palantir Technologies. This just goes to show you that feel free to invest into DataDog as well as Palantir Technologies and many other fantastic companies that are on the stock market right now. Go ahead and smash that like button for more videos on Palantir Technologies. Tell me what you think of both DataDog or Palantir. Subscribe if you are new, and I will see you in the next YT video.